that. Let's get more context around the sentencing and bring in Danny Cevallos. He's a legal analyst for NBC News and MSNBC, as well as the co-founder of the law firm Cevallos and Wong. Danny, thanks so much for joining us. Great to see you. Your initial reaction, 25 years?
It's interesting because under the U.S. sentencing guidelines, as calculated, Sam Bankman-Fried's sentence range would have been so high, it was technically an illegal sentence. It was actually in excess of the statutory maximums. That's how high his expected sentence, as calculated under the guidelines, would have been. Bankman-Fried's attorneys challenged that by essentially arguing, hey, there was no loss, because loss to the victims is the largest driver of these kinds of white-collar crimes. And so the judge rejected that, but yet, even though the judge rejected the defense's loss argument, the judge still went way below what the government was requesting, 40 to 50 years, and only 25 years, which represents a substantial departure. And here's the crazy thing about the U.S. sentencing guidelines, is that ever since a Supreme Court decision a couple decades ago, they're not even mandatory. As long as a judge calculates them, the judge can go below the sentencing guidelines. So judges have considerable discretion in this area. And this has been a very controversial area of sentencing because the guidelines take a nonviolent, non-gun, non-drug offender, and because of the loss amount, which admittedly here is so much that it's beyond the highest level of the guidelines, which only goes up to $550 million. So in a case like this, the judge, in the judge's discretion, decided to go somewhere in the middle of what the government was asking.
I mean, at the same time, the judge was criticizing Bankman-Fried for perjuring himself, for not engaging sufficiently and taking things seriously, which could have led to a sentence at the higher end of the scale. So why has he settled for a relatively low number at 25? Is it because of this fact that crypto's rebounded, that the people that lost money initially might get some or all of it back, things like that?
That's probably a major factor. It's an argument that the defense made, is that the loss here, because remember, the government and the probation department kind of arrive at their own number for loss. And so loss can mean a lot of different things. Is it the amount that actually went into SBF's pocket? Is it the amount that disappeared? And if it is the amount that disappeared, then should he get credit for the money that some people are able to get back, especially if they get dollar for dollar, 100 cents on the dollar? So loss is never a concrete number, at least in one defense attorney's mind. That's me. And in fact, the law has changed considerably in the last couple of years. It used to be intended loss. Now it's really supposed to be actual loss. What is the actual loss? So the judge may have taken that into consideration. But either way, the sentence that he gave was far below what the recommended sentencing guidelines were. The judge has the discretion to do that. But it's very interesting because when a judge excoriates a defendant for the bad things he did during sentencing, as a defense attorney, you're thinking, uh-oh, that means we're going to be on the high end of the range. And Sam Bankman-Fried was definitely not on the high end of the range. I know 25 years is a lot of time, but what he could have gotten was quite a bit more.
When you look through the entire case, the entire trial, the evidence that the prosecution provided to get to this conviction, was it very clear to authorities, had we not seen crypto prices crash? I guess I'm asking the extent to which, flipping on its head, he might have got away with all of this if we'd seen Bitcoin prices hold up throughout like they have now and bounced again.
That's possible. I mean, look, this is just my take as a defense attorney, but, you know, federal prosecutors are prosecutors. They're selective prosecutors. They have limited resources. So do they sometimes get their ideas from watching the news of who to maybe investigate? Yeah, that's possible. But the reality is that, you know, once you get the attention of federal investigators, nothing good can come of that, whether that attention comes from media, whether it comes from your company making an ill-advised stock move or business decision. No matter what, once federal investigators are onto you, bad things are probably going to happen. And that's exactly, this was a prosecution 101, government prosecution in a financial crime. They got to his cohorts, his co-defendants, got them to turn on Bankman-Fried, and from there, it was really smooth sailing for the government all the way. Arguably, the only reason Bankman-Fried testified was either one of two reasons. Either he insisted on it as a client, or the defense team thought it's so hopeless, we might as well put him up there and just try it out.
Danny Cevallos, thanks so much for joining us. Much appreciated. Right, turning back to the markets, a key piece of economic data on deck tomorrow, core PCE, the Fed's preferred gauge of inflation. Well, in a speech at the Economic Club of New York yesterday, Fed Governor Christopher Waller said there's a case to be made for holding off on cutting rates.
I see economic output and the labor market showing continued strength, while progress in reducing inflation has slowed. Because of these signs, I see no rush in taking the step of beginning to ease monetary policy.
Well, my next guest says he expects one of the sticking points for the Fed, wage inflation, to ease in the months ahead. Joining me now, David Kelly, Chief Global Strategist at JP Morgan Asset Management. David, great to see you. Thanks for joining me. Before we get to the wage inflation point, what did you make of Waller's comments earlier this week? We were talking to James Gorman. He said he wouldn't be surprised if there was no rate cuts at all. Your expectation of the number of cuts and what would happen to markets if we did indeed get none?
I think we probably will get 3 cuts. The Fed is clearly on the tight side of neutral right now. The economy is gradually slowing down. And what the economy has proven over the last year is we can have good growth even as inflation comes down. But I think the most important thing to recognize here, which I feel the Federal Reserve has not recognized properly, is that they have really distorted financial markets for many years by keeping rates much too low and then much too high. So, I don't think about a neutral federal funds rate in terms of the economy. The economy is actually pretty good at looking after itself.